Good morning, everybody. We've got a mixed to higher trade in the grain markets here early on Thursday morning. It is 6:08 a.m. Central Time as I record here. May corn futures down 1 3/4 at 723 1/4. December corn down 3 1/4 at 606. May soybeans up 7 1/4 at 1669 3/4 last trade. November beans up 7 1/2 at 1460. May Chicago wheat up 55 1/4 at 1114 1/4. May Kansas City wheat up 31 3/4 at 1107. May spring wheat is up 10 cents at 1068 1/4. If you guys are listening on the podcast, as always, appreciate it. Leave me a rating, leave me a review if you have not already. If you guys are watching on YouTube, hit that subscribe button. My goal is to get to 5,000 subscribers this year. I think we can do it. We hit 4,000 last week. If you need some additional assistance from me, guys, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan in the upper right-hand corner. Check out my subscription service, guys. $49.99 a month. I'll send you my morning email, my text messages, my subscriber-only videos, a ton of content direct from me. There is nothing else to buy here. There is no other fee. There is no other obligation. It's just a ton of information direct from me. I did a couple of subscriber-only videos yesterday. I did one where I ran through the outside markets. I love to talk about grain markets, guys, but I also love to talk about things going on in the energy markets, the stock market, precious metals, all of that stuff. So I ran through some charts, some history on what's going on in the outside markets. I did a second video regarding the action in the wheat spreads yesterday. There was some absolutely unprecedented action in some of the calendar spreads. I went through and did a discussion of that. So if you guys are interested in that sort of content, give that subscription deal a shot. Russia's invasion of Ukraine enters its second week. Ukraine's president says that their defense lines are holding. The eastern Ukraine city of Kharkiv suffers more attacks. Russia has seized the city of Kherson in the south. Newswires are reporting a tactical failure on Russia's part, and that may be true to some extent, but this situation is far from over. Russia's military is larger and superior versus Ukraine. The UN voted yesterday to censure Russia's invasion. More than 1 million Ukrainians have fled the country, according to the UN. This was a quote from Britain's defense minister. The main body of the large Russian column advancing on Kiev remains over 19 miles from the center of the city, having been delayed by staunch Ukrainian resistance, mechanical breakdown, and congestion. So the Russians are having some difficulty here. I still don't think this is going to end well for Ukraine, but certainly a fluid situation, and it continues here today. Wheat and corn continue to rally on Black Sea supply fears. Spot futures of wheat, winter wheat traded fresh 14-year highs again overnight. There has been some absolutely unprecedented action in some of these calendar spreads amid the volatility. I discussed that in that subscriber video yesterday. Russia and Ukraine together, of course, are projected to account for 29% of global wheat exports, 19% of global corn exports, and 80% of global sunflower oil exports. Ukrainian ports are closed. The Black Sea winter wheat crop is in dormancy. Corn planting would typically begin just a few weeks from now. There's a massive amount of uncertainty surrounding crop potential, export possibilities in the Black Sea, and that is a big reason, really the only reason why the wheat market is doing what it's doing, and you could probably say the same thing about corn. Brazilian soybean production estimates being cut again. We haven't heard much about this recently amid the Black Sea fiasco, but well-followed group StoneX pegged the Brazilian soybean crop at 121.2 million metric tons, down sharply from their previous estimate. USDA most recently estimated the crop at 134, CONAB at 125.5, so this number well below both of the governments. Now, USDA and CONAB both have crop reports out next week. They may again lower that production estimate for the Brazilian bean crop. StoneX left its projection for the Brazilian corn crop unchanged at 116.1 million metric tons. That corn number would be record high if achieved, so still a lot of potential for that Brazilian corn crop. Weather forecasts look pretty good, but the soybean market has its own story outside of this Russia-Ukraine deal, given this much lighter crop in South America. U.S. ethanol production declined last week, 997 million barrels per day. That was off almost 3% on the week, up 17% versus the same period last year. And it was around this time last year that we were recovering from that blizzard, down 8% from the same week in 2020. This is a fairly normal to maybe slightly light level of ethanol production seasonally. Production is on pace to meet or exceed USDA projections in regard to corn demand. Now, ethanol stocks have kind of stabilized. They were down 2% on the week, 24.9 million barrels. We've seen a drastic surge, however, in ethanol stocks in weeks prior, and ethanol stocks remain at their highest level on record seasonally. So this is an issue. The specter of high gas prices and the potential for reduced demand for gasoline kind of lingers here. The national average gas price today, according to AAA, $3.73 a gallon and rising. U.S. exporters sold more old and new crop soybeans yesterday, a total of like 20 million bushels sold yesterday between old crop and new crop. Unknown destinations bought 10 million. China bought another close to 10 million. So soybean sales continue, and the old crop sales are very much contra-seasonal in nature here. We're not supposed to be selling big chunks of old crop beans this time of year, but because of the South American weather issues and the much lighter South American crop that's being projected, we are selling beans. And the new crop book of export sales in beans was the second best on record, could be the best on record after this week or after the next couple of weeks. Crude oil trading into fresh highs this morning. The April WTI contract peaked above 116 per barrel overnight. That is the highest trade for any spot month crude contract since July of 2008. The International Energy Agency, its members, including the U.S., announced the release of 60 million barrels of crude reserves earlier this week. This action did absolutely nothing to cool prices. OPEC says it's sticking with its plan of only marginal production increases, so traders are citing a de facto ban on Russian crude. Western sanctions against Moscow exclude energy transactions, but they've been enough to keep global buyers away. They're worried about the details of these sanctions, public relations issues, all sorts of stuff. The U.S. is, however, applying sanctions to ban the export of specific oil refining technologies from Russia, perhaps making it more difficult for Russia to modernize its refineries. So just a giant mess here in regard to oil. How high does oil have to go until gasoline demand is materially reduced here in the U.S.? It's tricky to say. This is an inflationary environment. Is it $4 a gallon? Is it $5 a gallon? Is it $6 a gallon? Is it higher than that? We've probably got to get to the point of some rationing here. Fed Chair Jerome Powell is likely to propose a 25 basis point rate hike this month. Powell spoke to U.S. lawmakers yesterday. He said this: "I am inclined to propose and support a 25 basis point rate hike later this month. To the extent that inflation comes in higher or is more persistent than that, then we would be prepared to move aggressively by raising the federal funds rate more than 25 basis points at a meeting or meetings." Powell said it was too soon to conclude how Russia's invasion of Ukraine would impact the economy and what it would mean for policy. The trade was talking, of course, a 50 basis point hike and several rate hikes this year prior to this invasion. And this inflation isn't going anywhere. I mean, crude oil spiked, grains have spiked. You've got energies and food right there, substantially higher just in the last couple of weeks. So the inflation isn't going away. So what is the Fed going to do here? I don't know. Probably a 25 basis point hike this month. We will have an export sales report from USDA this morning. Sales for the current marketing year: corn sales expected 600 to 1.2 million. Soybean sales expected 600 to 1 million. Wheat sales expected 200 to 650. The cattle market was mixed yesterday in live cattle and sharply higher in feeder cattle. There was some cash trade 140 to 142. The boxes were marginally lower. In the outside markets, the U.S. dollar is higher. The S&P is down 5. The Dow Jones is down 20 points. Bonds mixed. Gold's up a little bit. Crude oil up $1.67 last trade in the April WTI at 112.25, about $4 off the overnight highs. Everybody have a great day today. I will talk to you guys same time tomorrow.